please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Counting down to pre-open, SP Tulsian of sptulsian.com is with us. Mr. Tulsian, good morning. Your thoughts first on this construction ban. You reckon the Mumbai-based players could be impacted quite severely?
See, Anuj, I think this is mainly the goof up between the two departments, Urban Development Department and Environment Department. And honestly, if you really ask me, probably I may sound a little optimistic, but I don't see that the ban will continue till next hearing on the 9th October, because if you see, the affidavit was to be filed in Supreme Court either by the Urban Development Department or by Environment Ministry. And that was the confusion prevailing between the Maharashtra governments, both of them. So I think that on an urgent basis, they will move before the Supreme Court, and maybe Supreme Court will put a penalty or will reprimand the departments, and these things is likely to get sorted out. And again, there has been, though the order spells out that no new online projects, no new permission for the projects and online construction. So that indicates that all the construction, whether it is a residential one of the private builder or of the government agencies, will going to get stopped. But if you recall, in March 18 only the Supreme Court has allowed for this new project sanction and all that for next 6 months. So yes, this should be taken as a temporary this one, but I am expecting the relief to come in next 1 week or so.
Oh, 1 week. That's good to hear. Good morning, Mr. Tulsian. Now, of course, we have to move over to the auto sales numbers. I'll come to the positive numbers in a minute, the commercial vehicle sales. But the personal vehicle sales, Maruti, Hero Moto, TVS, what have you made of those numbers? Will the market worry or just leave it to Kerala?
See, Lata, first let's take that the commercial vehicle segments are seen to be extremely good. Whether you take the Ashok Leyland or Eicher CV segment or maybe the Mahindra & Mahindra, again the commercial vehicle segment, whether heavy, light or medium commercial vehicle. So that is the respite, or that's a very positive news, because market has all along been apprehending that the things are going to be bad for CV segment as well. Come on the tractor sales, the July and August are always the lean months. So I'm not worried on that account. The August and the September and October are the bumper months. This time only because of the slight delay in monsoon and the festive season getting postponed by about maybe 15 to 20 days. Probably the best month of September up to October may spill over to November also. So we will be going to see the flattish kind of tractor sales from Mahindra & Mahindra, who have not yet declared the number. So I'm not worried for the escort sale. They have very much been online, and this lean period is coming to an end. So again, starting next month, we will be seeing very robust tractor sales numbers. Come on the PV sales, yes, the things are looking flattish, and I don't know whether one can only attribute this flattish kind of performance for Karnataka flood, which definitely has contributed to the fall of the sales, because that kind of fall in sales has not been seen in the TVS motor sales. If you want to take a negative or maybe a flattish view on the two-wheeler segments, that they have not performed well. In fact, TVS motor has performed exceedingly well. Maybe in case of Royal Enfield, Eicher motor, yes, the things are looking flattish at about 70,000, but they have been facing some kind of inventory constraint and capacity constraint also, and that was seen in the month of July also. So maybe one can attribute Hero Moto, again the numbers were seen to be flattish. We need to see the numbers from Bajaj Auto, which have not yet been out. So overall, I can say that the two-wheelers have been not so disappointing. You can call them as flattish, but yes, PV sales definitely have been looked little flattish to disappointing.
Okay, Mr. Tulsian, good morning. Yes Bank is now down 15% in one fortnight alone because of all these issues surrounding Rana Kapoor. Is this a good time to be buying the stock?
Yes, Sonia. In fact, this is a good time. I don't know whether the things will really how long it will linger on. But on Friday, the corrections which you have seen, the extension having come to Rana Kapoor till further notice, that has not been received well by the market, which I don't read it so negative. Because even if one presumes that the Rana Kapoor has to get replaced, because if people have been talking of divergence, one may say that in case of Yes Bank, the divergence quantum is very high. It may be 2x or 2.5 to 3x, which has not been in case of other banks. But this divergence issue has been seen prevailing for all other banks. So I'm honestly not see any reason of worry on that account. And even if the replacement process has to happen, that's a long process. It cannot happen just by a rejection letter. The replacement process has to happen. That's a long process. It cannot happen just by a rejection letter. And the things will happen. The replacement will happen the very next day. So at least the process is as of now on. We do not know that what all has been transpiring agreement between RBI and Yes Bank. But things are, for the time being, looking to have gone on a settlement mode, and things are looking positive because we have been keeping the positive view on all private sector banks also, having corrected whether to take a call on HDFC Bank, Kotak Bank, IndusInd and Yes, more especially these 4 banks. We are keeping our hold call on ICICI and Axis Bank because both have risen about maybe 15 to 20% in last 1 month alone, or maybe 1.5 months. So keeping hold or maybe not buying advice on these 2 banks, but on all other 4 banks like HDFC, Kotak, IndusInd and Yes, we have a buy call.
Okay, Mr. Tulsian, do hold on. The markets have opened with a bang, but let's see where they settle down. At the moment, it's celebrating a Diwali of a kind. Wipro is up 10% on a deal that was largely known. Tata Motors is up 3%. M&M is up 1.5%. So I think we should wait. Even the likes of Axis, Yes Bank are all up. Let's just wait and see whether it's able to hold on to this level of enthusiasm. That's the rupee opening. That's a little weaker, the rupee. But we'll have to wait and see. It's a record opening low. We'll have to wait and see. It has gone up to 71 in Friday's trade. But let's see how things pan out. 70, 78 now. I think it went to 70, 84 on Friday. So we have to see whether it weakens further. There is a strong dollar story out there, as well as higher crude prices and fears of a rate hike. So today we have to watch the yield rate as well.
Wipro is, of course, going to be the stock of the morning. So in pre-open, it's 10% higher, but let's see where it settles. Let's see some of the Mumbai-based stocks, real estate stocks, for example. Let's pull out Oberoi Real Estate. That, of course, is the first one that comes to mind. So down
Godrej,
about 1.5%. Yeah, Godrej and a couple of others as well.
HDIL perhaps.
Also, some of these construction companies, perhaps, or infrastructure companies.
Technically, even L&T.
Yeah, even L&T.
But I think they will be given price for construction. You don't construct for 1 month, I don't think they lose as much as the guy who is doing the payment, and they are likely to be the real estate owners.
Okay, also on Wipro, although this acquisition was known, it was announced during the Q1 numbers, the incremental positive is that the company that they've acquired, they've won a 10-year deal valued at about $1.5 to $1.6 billion. So that Alite HR Services, which Wipro has acquired, that company has won a 10-year deal. So I guess that's what the street is also taking very positively right now. And in the broader markets, Ashok Leyland is picking up because of that 27% commercial vehicle sales growth that we've seen for Ashok Leyland. Our technical guests are still with us. So let's go to them for a quick check. By the way, Idea Cellular once again is moving up higher. Remember, it was one of the big movers last week as well. It's up almost about 3.5%. Ashwini, any of the IT names that you would look at for this week? And what about Wipro? I mean, I know it's not been at the top of the traders' lists generally, but today it looks like it's going to have a good move.
See, the point is what after today, because if you open 10% higher, then probably the opportunity is limited. But I think mid-cap IT, Mindtree, NIT Tech, those are the guys which are having a more secular kind of move. These one-off type moves, people who are stuck would probably use Wipro's move to exit. But overall, all IT, all rupee sensitives are looking up. I don't think Wipro is quite up there because it's not at new highs, whereas several IT stocks are making fresh highs.
Okay, benchmark bond yield opens at 7.94%. So that's not much worse. It was already 7.95 on Friday. So it's not opened terribly negatively, but the dollar is strengthening. And crude also is not in very good shape. So we should expect some negative impact on some of the crude derivative users, the usual suspects, airline companies, tire stocks, paint stocks. All those should logically have a lot of pressure because raw material gets much more expensive. DLF starts negative. They don't have that. Do they have so much construction in Bombay?
No, the DLF negativity is because of that. No. Because
that's
of that.
Positive. That's actually a positive.
Because of that FIR, which is now there in Delhi on that Robert Vadra and DLF case. That's the reason that that is the big overriding factor. In fact, that's something we should have discussed. 4% lower is what you have on DLF because of that issue. But Mr. Sen, your thoughts on DLF in particular?
See, Anush, DLF have two news. One is CCI exempting them from their old charges of Gurugram, but this Robert Wadler deal is, this FIR implication is really seen a very serious thing, and this kind of weakness is expected. So I think that the CCI exemption or the benefits or the favorable verdict coming in favor of DLF is seen having negated by this Wadler FIR.
Okay. Well, the bond yields have opened flat for now. So let's get back to the big story. From Friday, the Q1 GDP coming in at 8.2%, much better than street expectation of 7.7%. A. Prasanna, Chief Economist at ICICI Securities Primary Dealership, joins us. Good morning, Prasanna. What is in it for the market, this big number? Is an October rate hike on the table?
Yeah, I mean, first of all, to some extent, the strong print in Q1 was expected because the base effect was favorable. But within that, if you look, I think segments like agriculture and services definitely was a bit more stronger than what most of us were anticipating, which just suggests that the momentum was quite strong in the first quarter, and we do expect some of them carried on into the second quarter. So on the whole, I think for the consensus, it means that there are some upside risk to GDP estimates, and probably for the MPC also. I think given that the split of H1 and H2 expectations they had outlined in the previous policy statement, they could also probably highlight an upside to their estimate. So, and one of the things what we have seen is that the MPC kept a neutral stance because they were worried about risk to growth from months, such as on the trade front. So what this data does is it does provide them with some confidence that the country is better placed. I mean, we cannot wish away those developments, but at least we are now better placed to handle some of those downside risks.
Okay, Prasanna, good morning. I'll of course ask you about the rate hikes, etc. But before that, also wanted your views on the tax collections. The direct tax collections grew at just about 6.6%. Corporate tax collections were barely 1%. Would it be a disappointment?
Yeah, so on direct tax, I think what has happened is probably the pace of refunds has been faster than the previous year. And that is the reason why I think the YoY comparison looks so unflattering. We do expect it, particularly on the corporate tax side, I think the budgeted growth numbers are not very aggressive. We do expect that to comfortably be met. Income tax, we have to wait and see. But I think the worry is more on the GST side, and this is something we have anyway reiterated many times before. I think for the state, the GST collections are going to be very good. Probably for some of them, it might be better than what they budgeted. But certainly for the center, I think they are not going to meet the target. So I think that is where the risk of fiscal slippage goes up.
The yields have actually opened a little softer. I mean, 1 basis point softer, 7.94 instead of 7.95 that it closed on Friday. The market is not reacting to the rate hike fears. Is that all already priced in at 7.95?
I think, I mean, the way market has moved, a lot of it is because of what is happening in the currency market. I wouldn't put it as a rate hike fear per se. It is more of currency market and sympathy with what is happening there and other emerging markets. Of course, oil prices also have gone up, you see. So it's a bit paradoxical because in terms of inflation, at least the near-term prints don't look that threatening for the market. But because of what is happening in global markets and the way RBI has become a bit unpredictable in the currency market as well, so which is what I think the bond market is still trying to figure out what exactly is RBI's game plan.
Okay. So, my only point is, will there be a fear that now you have to change stance? How can you keep neutral? And if it is change in stance and a rate hike expectation, then are we looking at 8 on the yield?
I mean, that is true. So if I mean, as of now, we still think the next hike will be in December, but the probability of hike in October has gone up. So for argument's sake, if they hike in October, yes, I think it will be very puzzling if they don't change the stance as well. For some reason, it looks like, I mean, RBI is very, very reluctant to, or the MPC is very reluctant to commit to a change in stance, even as they hike in successive meetings. But as far as the market is concerned, I think even without a rate hike, anyway, we are going to 8%. We are in fact crossing 8%. I think the yields will probably peak somewhere around 8.25 to 8.5. Irrespective of whether the rate hike is coming in October or December. I think the fiscal situation is quite bad. And also in the market, if you see in terms of positioning, I think people are still not kind of reconciled to this rate hike cycle as well as to fiscal slippage. And that is the reason I think yields will continue to go up.
All right, Prasanna, thanks a lot for your time today. Well, 5 minutes left for markets to open. The pre-open has settled very strong. 11,752 is what you have on the Nifty, and which is interesting because the all-time high is 11,760. So we could be starting at very close to all-time high. Ashwani, this pre-open looks rather large. Does this change your view on taking short, or is the first trade on the short side?
See, the first trade has to be short side because this 130-point Bank Nifty gap up will take you right to 28,350, 400 on the futures. So I would try a short trade because this sort of gap up may not be sustainable.
Okay, we just have 4 more minutes left for the opening rates to come in. Looks like it's going to be a good opening. Mr. Tulsian, thank you for joining us and giving us your views. Udayan Mukherjee also joins into our conversation now. Udayan, good morning. I'm sure you looked at the GDP numbers. What are your thoughts on that? You think growth is something that the market is going to latch on to? I mean, yes, GDP is a lagged indicator, but even if you look at lead indicators like commercial vehicle sales, they've been picking up quite a bit.
Morning, Sonia. So yes, the GDP numbers will make the markets happy, but I think the market will also know that come next quarter in Q2, Q3, we'll probably get closer to the 7.5% kind of handle once again, once this base effect gets neutralized. So the surprise is not that big once you adjust for the base. And I think the attendant concerns around the market, which are to do with crude prices, elevated fiscal deficit because of GST collections and therefore higher bond yields, and the way the dollar is behaving, might rein in any kind of huge reaction from the market in terms of the GDP surprise. So it is good news, but I think the macro, there are enough wrinkles which are around this GDP growth number for the market to fret a bit once we've got the first flush of the reaction out of the way.
Okay, well, good morning. Then actually now we could become, this double deficit kind of worry for foreign investors. While they should be attracted by growth, the July trade deficit raised fears of a current account deficit that could be close to 3%, and the GST numbers are not at all encouraging. Do you think we will sometime pay for it, or will growth paper it over?
Right now, there is too much momentum in the market right now, Lata. I don't think people are fretting about current account deficit and things like that. I think generally the Nifty is on a bit of a tear, and till that momentum breaks, I think these macro things might be brushed aside. But they are piling up, you're right, that because the GST numbers disappoint consistently, and given that the election kind of drumbeat will also start playing as we get closer to the end of the year, I think it's a fair estimate that we'll be staring at a significant fiscal deficit slippage by the end of it all. And we are talking about all of this with oil still not having crossed $80. Now imagine our macro picture, given all this kind of good news on growth. If oil were for some reason to go to $90 a barrel, what would it do to our currency, to our bond deal, to inflation, and to the RBI stance? I think, and it's just about $10, $12 away. So, I mean, these are things which one needs to pause and think about before getting carried away on the macro. There are enough risks on the horizon, but right now, as I said, there is enough momentum for traders to shelve those worries for the time being.
Okay, fair enough. Then good morning. So the last month belonged to IT and pharma, of course, rupee playing a big part. Your thoughts on the kind of rally that we have seen, large cap, mid cap, everything participating?
Well, the mid caps did pick up, Anuj, in the August series, and we did see a 5% kind of up move in the mid cap index as well, which is good because mid caps were lagging the large caps terribly. But in the context of the market, I would say it's still relatively narrow. I mean, even if you look at this 1,000-point rally over the last couple of months, which frankly surprised me, I must admit. But, there's still those 5 stocks, Reliance, ITC, ICICI, and TCS and Infosys, which accounted for 600 out of those 1,000 points. So, in the scheme of things, it is not a very broad-based kind of an up move, though you can't fault the move of the Nifty. Going forward, I think people will still back the exporters right now because they have the momentum and the currency behind them. And you could see some plays in the corporate banks which have refound momentum after a long time.